George Milling-Stanley. He's the head of gold strategy at State Street Global Advisors. George, it's good to have you back with us, and thanks for starting your week with us here on the TD Ameritrade Network. I want to begin with some comments that you had last time on. I asked you basically if this move to the upside in terms of gold that we were seeing was sustainable. It looks like with the added volatility, the uncertainty associated with U.S.-China trade talks and the new highs up to 1565 in the overnight, as you mentioned last time we talked, it has been.
Yeah, I think you just nailed it. Trade talks, all of this stuff, it just adds to that general atmosphere of uncertainty that we've been suffering under for a long time now. And even though the economy seems to be doing well, people are still nevertheless nervous. The conflicting signals coming out of the bond markets, as you were discussing a little bit ago, the possibility of recession, all of that stuff. I think that gold is really set here. We seem to be establishing ourselves above that $1,500 level, which is $150, nearly $200 higher than where we were just a couple months ago. I think the gold's done very well. I think it's going to continue to do very well also.
Let's take a look here. We have durable goods numbers, which just came in this morning. George, for the most part, gold's kind of limited in terms of reaction, holding right around 1539. New orders came in this morning significantly better than expected, 2.1%. They were looking for 1.1%. Looks like a little bit lower than expected in terms of minus the transportation on the month-to-month, George, down 0.4%. Core capital goods coming in up 0.4%. Now, what are you watching here in terms of the dollar, George? Because I'm noticing that that's starting to pull back a little bit recently as well. And ultimately, in theory, that could help lift gold also here, in addition to the fact that we've got rates which continue to hold near lows. I mean, you heard me mention bonds into new highs in the overnight.
Yeah, look, obviously we're watching the dollar, no question about that. This asymmetrical relationship that's developed between gold and the dollar is a very interesting one. And that's something that's developed just over the past 10 years or so. For most of the time I've been involved in gold, you've been able to look at gold and the dollar as inversely correlated. What we're finding now is that when the dollar strengthens, gold can go up, down, or sideways. There's no significant statistical relationship, but every time the dollar has turned down since the great financial crisis, then gold has gone up. So I think that is definitely something that I'm keeping my eyes on here. As far as day-to-day statistics and economic data is concerned, I don't think the gold market is really too closely focused on that. There is just this general sense that we really don't know exactly where the economy is going. I don't think that the data that comes out day to day is necessarily helpful in providing guidance to investors. So I think that this is another reason why people have turned to gold. When people are unsure of themselves, unsure what decisions to make in other markets, then gold always looks good. And of course, the other markets really, yields in the bond market are really pretty dreadful right now, mostly negative,
sure.
And certainly real yields very negative. So that removes the old argument against gold that there's an opportunity cost involved in investing in gold. If there's no opportunity elsewhere, then there's no cost to investing in gold at all.
Yeah, what's interesting for me is there's so many different ways to invest in gold in terms of expressing your opinion under circumstances like this. And you've mentioned in your notes how actually GLD and GLDM is a good alternative for investors to express their opinion without necessarily having to deal with the burden, so to say, of the actual physical and the storage of.
Yeah, I mean, what investors really want, I think, for the most part, is exposure to movements in the gold price. That's what gold ETFs will give them. That's what GLD and GLDM will give them. There are always going to be people who want to own the product themselves in their own hands, as it were. There's nothing wrong with that. It's just that when people want exposure to movements in the gold price and aren't necessarily concerned about having the product physically in their own hands, then GLD and GLDM work perfectly. They're a very cost-effective way of gaining that exposure. And right now, that's obviously what investors are looking at. GLD up 240 million over the weekend in terms of new creations. So closing in on $42 billion in total, up $3.5 billion year to date. GLDM has been around for a lot less time, only a little over a year. but that's up almost $500 million this year so far, closing in on that $1 billion mark, with GLDM standing at $930 million in assets this morning. I think that those are very much reflective of the way investors are looking at the gold market right now.
All right, definitely something to watch in terms of those massive inflows, and also you can see why gold's rallying. Let's talk a little bit about copper, George, if you will, because it's a little bit of a different story in terms of the rally we're seeing in gold. I just noticed copper into new lows for the year.
Yeah, look, there's a big difference here. Copper primarily tends to follow GDP growth figures. And economic expansion, then people are going to want to go into more construction where a lot of copper is used, for example. And with uncertainties in the economy, then to me it's no surprise that the copper price is looking a little weak these days, and that gold is looking strong. That's exactly what I would expect. The days when gold was going up because of emerging markets buying jewelry in the early aughts of this century, and copper was going up because of all the construction boom around the world, especially in China, those days are over for now at any rate. So I'm not particularly confident in the outlook for copper right now, but I am increasingly confident in the outlook for gold, Ben.
Noted, George, and we'll have you back in the near future to follow up on this discussion. A great one, and definitely a lot to watch here in terms of precious metals and reflection of some of the uncertainty we've seen in the market. Traders, that's George Milling-Stanley joining us to take a look here at some of the activity we've seen in the metals. He's the head of gold strategy at State Street Global Advisors.